Hi everybody, this is Gary Dean with Sentiment Timing, and this is our technical video report for Tuesday, January 30th, 2024. Really a nothing day today. This is actually what I was expecting yesterday to go like, but as I said, that when they kind of crashed the dollar and we saw interest rates kind of fall. That was the spark that gave the stocks what they needed to burst higher. But today was kind of a flat day. I'm showing you the NQ. Basically, it's been a leader, since 2023, honestly. But in any case, I said in the report today, as kind of well in the morning notes, that the bulls right now are just running through a minefield, and they've been doing really, really good, not stepping on anything, but there's more and more people that are jumping into this field, which increases the odds of somebody stepping on one. And it's not going to take a whole lot. You could take one that's going to all of a sudden set all of them off. And what I mean by that is that, you have everybody that's really, looking higher when you go on, any kind of talking head station, when you're looking, news. I mean, everybody's giving you reasons why this market's never going to pull back. And, I've been showing you the intermediate term charts, and those are still flashing sell signals. So one of the mines that I'm talking about was, you had these big tech companies that are starting to report, and it was today. Microsoft beat earnings, but they're kind of flat, meaning that people are just exhausted. They don't want to chase it up here. Even with good earnings, they kind of just left it go. And then you had Alphabet that they were disappointed one way or another. I didn't really read the whole report, but they're getting clobbered. And as you can see, you have the NQ that's down almost 1%. Today, but it's kind of funny how they do these things in after hours right now, especially with the big tech stuff, because tomorrow we have the Fed that's going to overtake everything. So all of whatever bad news or anything that came out after hours could be erased tomorrow. So, but in any case, the pattern on the NQ here, which is the NASDAQ futures, if anyone doesn't know, is this is a descending triangle. This is the target. It's right where support is. If they lose this, you can see we have a little bit more support right below it. And that's at the, hang on one second, I'm just trying to bring this. So this is, say, the support area, anywhere between the 1750 up to the 170, 138. But in any case, if they lose that, then we're probably coming back down to these lows and these lows. And if the NASDAQ starts to go, we can tell that's the only time that we had, we saw the S&P even take down, 100 points off of it. So again, sell signals are in place here. Wave structure, I think I've showed you, and there's a couple little ways to do this. So if we're just looking at a bigger thing here, 1, 2, and I have it as 1, 2, 3, 4, 5, 3. And now we're 4, and now we're making a wave 5. And this could be kind of subdividing, where you have a 1, 2, 1, 2, and this was 3. We're making the 4 and then a 5, and then that would be the wave 5 of 5. So whether we need to do that or it's just a 1, 2, 3, 4, and we ended 5, it still is looking for kind of the same thing, and that's going to be a pullback. And the reason why, hang on one second, that's the VIX. Alrighty, so and what I mean by that, so this is just the wave 5 of 5 here. So here, it's kind of hard to even guess where to wave 1, 2, 3, 4, 5, because we had nothing but like a 20, 30 point pullback. But if we just go these squiggles and say 1, 2, 3, and this is 4, and now, as I showed you before, we're making this wave 5 of 5. That's where we start looking at what the retracements can be, and let's just say that was the high. A 50% retracement, we're looking down at the 45.16, and as I said, more likely it would be a 62% retracement, and that's at the 44.17. I've been saying this, it's been being ignored, but it would be probably the healthiest thing for the market is to see some type of drop like this where it shakes out these, the perma bears and everybody just looking higher, because as I said, it's not sustainable to sit there and be going up 20% in 90 days and then not having any kind of break. So and on top of that, it's really the majority of this move is because they're anticipating the Fed to do, 6 rate cuts when they're saying they're only going to do 3. But as I also explained in the report or the morning notes, I'm not sure which one, where, the Fed may be in a pickle right now because you have the Yellen, or inflation's only transitory, saying, that was what's going on with inflation, who is dead wrong, is now making a $2 trillion bet that rates are going to be lower than where they are, because she's been, kind of filling this gap with short-term notes. And if they expire and rates are higher than where they are, it's a $2 trillion loss. And with our, with our deficit where it is, they really can't afford that. So it's going to be kind of interesting because, the Fed knows where they are at right now, and if they're going to sit there and try to combat inflation like they're supposed to be doing, then they're going to leave rates as is, and maybe do 1 or 2 cuts this year. But to sit there and be in this pickle where if follow the market and help out Yellen and cut rates, not tomorrow but in March or in May, the odds of inflation ticking back higher are going to be very, very high. And now what do? They kind of laid their cards on the table on how they're going to do this. So let's just get to the what we need to see as far as support levels and stuff like that. So obviously right here, short-term support 49.16. This is probably the more important support, 4,900. But until the bears can get through this 48.67, it really 48.67, 48.45, the bulls are going to hang in control, because even if they lose that, we still have support down at the 4,800. And, so they're building these short-term support levels. But, as I said, with the with this type of move, I would expect somewhere down into this area we get some kind of pullback, and then from there, I wouldn't really expect it to go too much even higher than this, but just kind of crawl up at a normal pace. So this is all just nothing, because it all depends on what the Fed's going to do. We have the sell signals; they've been ignored. Maybe the Fed lets some air out of this this balloon, but we'll have to wait and see till tomorrow. So with that, have a great night, and I will talk to you guys in the morning.